Tell me when.
Here we are. Okay, hello everyone, and welcome to Jim Dalton's presentation on the preparation for the monthly employment number. Jim has also decided to go over today's price action and some interesting things he's been seeing. So we're glad you're all here. Thank you very much for taking time out to hear Jim share his work. And any questions, please type them in. We'll get to as many as we can. This presentation is being recorded. So with that, I will hand it over to Mr. Jim Dalton.
First of all, I want to say welcome and thank Julia. Julia was casually getting her teeth done this morning. Thought she had a nice morning, and then because of the price action this morning, I saw it as one of the most important days that we can ever see. It's the kind of day that will whipsaw a lot of traders, and I wanted to go over this morning. And I wanted to also replay part of the early morning. So we're going to replay it. I'll make notes as we go through it. We will, at the very end, we will be in preparation for the employment report tomorrow. Okay. Where I want to start is I want you to see the upper distribution from Wednesday. As you can see, for those of you who have been with us, you know how I view double distribution days. For those that are new, when I have a double distribution day, and yesterday was a double distribution, I treat the upper distribution as a totally separate day or auction. Now, what does that mean? What that means is if I'm going to be in balance, I'll be in the center of this. Out of balance to the upside, out of balance to the downside of this separate day. If I stay within the range, then it's probably low opportunities. If I'm out of balance to the upside or the downside, those are the times that we usually have large opportunities with us. So that's a double distribution day. And that's what it looked like as yesterday closed. The first thing you'll notice is there was no excess in the high. There was no indication that the auction, that the current all-time long-term auction had ended. The profile report for last night, and what we do, we put out at each evening for those that are clients or are intensive clients, they get a report at the end of each day. It's called a recap and preparation report. And in there, I label the profile, the current profiles, and I try and set up some type of plan for the following day. Those that have already registered for our intensive that we're going to be holding for 30 days in July will have got this report as well as just a few individual clients. So when you look at it, we already see the day I just talked about. There's the upper distribution. There's the non-excess. We've labeled across here, which was the previous electronic high. And that is important. Do we get back into that area or not? Also, we look and we see the pullback low, this area in here of yesterday afternoon. So this is the single prints of the double distribution. If the market were to break on the downside, we'd mark this as similar lows, an important level, and right down here, also an important level. But that's not what happened today, so let's just move forward. So here's the upper distribution, no excess to the high, which says there is no completion to the current auction, or at least not relative to market-generated information. So the report I wrote last night, the markets have been gearing up for several days, expecting big things out of the ECB on Thursday. Remember the difference in time zones. I believe this report actually came out, I want to say it was about 4:45 our time. And I can't remember, it was my time back here or your time in the East.
It's about 7:45 okay. Eastern Time, p.m.
Okay.
Yeah.
So it was earlier here, I couldn't quite remember. Okay, again, I've said it, but I wrote it again. There's no excess or confirmation of a top for the current auction. The best I can offer is to begin with Wednesday's upper distribution and treat it as we always do. We see it as a separate day or auction. You want to see if we open in or out of balance relative to that distribution. This is what actually went out in print. Anything significant to the upside will see the market out of balance to the upside. Anything significant to the downside will see the market out of balance to the downside relative to the upper distribution. If an auction to the downside gets underway, take the references one at a time. They should provide a roadmap on a break. So this is, okay, let me stop. This is what the report's going to look like for tomorrow. This is the upper portion. We had another double distribution today. But just put that aside for right now. That's what today looks like when it's all done. And we'll start with that upper distribution for tomorrow. But what is more important is tomorrow's report that goes out tonight. I want to recap what happened this morning. And I think what happened this morning is extremely important in the education of any trader. Trading is very difficult. So many times traders do well on quiet days. It is on days like today that there's a tendency to get chopped up. So let's take today, I'm going to walk through this one step at a time. Then we're going to replay the morning, at least the first 45 minutes or so. But when you see the replay, I want you to have these points in mind. We opened with overnight trade establishing a new all-time high. What's the importance of that? We have written many times that it is highly unlikely that a long-term auction will terminate in the electronic or overnight market. So again, we're saying that there was no high. By the time we opened this morning, it was very unlikely that the all-time high was in the market. Next, we say overnight inventory was very long. For the last 5 days in a row, we have seen a correction to overnight inventory. For those that are new, we simply look at overnight inventory. If it is predominantly above the settle from the previous day, we consider it to be long. If it is below the settle for the previous day, we consider it to be short. And of course, there's variations in between. So we came in today and we had long overnight inventory, very long overnight inventory. And remember, the last 5 days in a row, that overnight inventory has been corrected. One of the things that I have written about numerous times is the most difficult trading days for traders very often is when overnight inventory is being corrected. And they mistake the liquidation or the correction of overnight inventory for a downward trend, today a downward trend, when in fact all it was short-term liquidation. Point 3, the opening was out of balance to the upside. In other words, we gapped higher. The market immediately filled the gap to the tick, not a sign of strength. Don't mind me. My machine is very sensitive to heat. Okay, market immediately filled the gap to the exact tick, not a sign of strength. When that happens, it's a mechanical short-term buying. This is an alert that it's very likely that we're coming back to that level. Now, this is a really advanced concept for you to begin to grasp. More than likely, it is not longer-term money. Longer-term money isn't going to wait and buy exactly at the previous day's high. That is the domain of shorter-term traders. the market rallied after it filled the gap by touching yesterday's high. The market rallied, crossing the opening several times. Another alert that confidence is not high. The highest confidence market, we will open and we will either move directly from the open or maybe test one time in the other direction and then continue in the reverse of that and show very little let up. 6, liquidation gets underway. What you're going to see later on is we rallied back and forth through the opening. Then the market began to show liquidation. On the liquidation, we saw stutter steps lower. We saw several rallies. Again, evidence that the liquidation break was not of high confidence. What does that mean? That means that the chances of downside continuation are lowered. 7, the final push down trades below the combined upper distribution low from Wednesday and the overnight low. Very important, because once you got the distribution low, upper distribution low from Wednesday and the overnight low, you had your final flush to the downside. The liquidation is complete. This is the 6th day in a row that overnight inventory was corrected. An excess low is left as the market re-enters from below back into Wednesday's upper distribution. The chances for lower value are very low. This was becoming evident as it took 2 periods to get below the lower distribution. I had initially been focusing on the upper distribution as a separate day. The market rallied above the upper distribution and again below the distribution. If you have, in other words, what I'm saying is, here's what we talk about before we go on to this. If you have a day, and say the upper distribution, when you look up above it and come back in, the destination trade, when you come back in, becomes the opposite end of that destination. We made that destination and we went all the way through it. When it looks below and comes back in, the destination is once again back to the upper end of that distribution. So what we had today, we had a failed upside breakout of the upper distribution. That was then followed by a downside failed breakout. When the downside breakout failed, then the market turned around and it rallied for the remainder of the day. And we're going to replay this now. But what I wrote here, if you have replay capability, this would be an excellent time to employ it. What I want you to sense is the lack of confidence on the downside and why I thought it was simply liquidation. Thursday morning is an important market to understand, as first, it keeps you out of the whipsaw, and second, provides an understanding that allows you to profit. The goal is to overcome seeing only price and be able to read the continuous two-way auctions in the market. The villain for most traders is price. And we say here, following an excess low and re-entry into Wednesday's lower distribution, the market rallied to take out the overnight high. Julia, are you ready to replay the morning? I want to replay it at full time, at full speed, and then I will tell you from time to time I want to stop it. But I want it played at regular speed rather than slowed down.
Okay. Can you see my screen?
Yes, I can.
Okay, I'm going to start the play here.
Okay, hold, stop. Hold. Can you move the left? Yes. Okay, and can you put an arrow across yesterday's high? Okay.
Yeah, I should have that. Okay.
Okay. So notice it came down, and I said it went exactly there. It looked like it went one tick below it. Okay. Now remember, this is only played a few seconds. Does that upper left-hand panel have to be there?
I'll move
Oh,
it.
you need it. Okay.
Just right now, it's okay.
Fine now. Okay. So you saw it go down, tag the low.
Tag the high, yeah.
Well, you saw it go down and tag yesterday's high. You see it back up towards the opening, to the opening, through the opening, again, back to the opening, back through the opening, back and forth through the opening. Okay, stop for just a second, please. Okay, what you should be recording at this point in time. We are out of balance to the upside. We filled the gap, but the confidence remains low. We are back and forth through the opening several times. The longer I see something back and forth through the opening, the less anxious I am to trade, the more willing I am to give the market some time to set up. Remember, I'm also aware that I am very long overnight inventory. Let's continue with the replay.
Just to note for people, why is it very long, would Jim say? This is the settle from yesterday. Most of the trade happened above it. So people were asking what's very long versus long, etc.
Okay?
Okay.
Okay, so we're trading at the opening, back down below the opening, back above the opening, back above the opening, little extension to the upside. Notice the white line, it's exactly at half back for the overnight. It's through the half back. Remember, we filled the gap. We've been back and forth through the opening multiple times. One of the things, remember I recorded, when it goes back, even though I was right, I said I filled it by 1 tick, filled it by 2 ticks. You know, that may last all day, but it's not a sign of strength. One more time, we are back to the opening. Remember what I said, how important it is early on to understand that level of confidence. What happens if you're following price, just price, and you don't have a reference for it? You may think this market's really on the way, but when you see how many times it's been back and forth through the opening, that should be an alert that confidence is not terribly high. And remember, overnight inventory is very long. Notice the heavy volume, the 7,164 contracts. So I said, yesterday I was on a webinar and I said, a lot of times if there are sellers, they don't wait to the exact high price. So just because it goes through there a couple times, you got to keep your eye on that 7,000 contracts. Look at it grow, 8,000. So now remember, and that was very telling. You had that, once it came back through, there was a sign that was probably sellers at that 8,000 level. First time it was showing 7, and usually anybody with size, they've got to lean and sell a little early. They don't wait till the exact high. They want to sell. They want to sell into the people that are buying. So we want to watch that 8,000 contracts. A lot of trade taking place up there. We're now at 10,000 cars. And you see we only got one tick above that. We're back again, above it again. A lot of volume there, 11,000. Notice we're just above the opening. We're back to the opening.
Do you mind if I just answer the color question, Jim, or do you want me to?
No, go ahead.
What is the significance of the white, red, and purple colors on the volume? Red is high volume. It's just reflecting the text figures. We see 12,007. It's red. Pink is medium. White is low. You see on the high, it's very telling sometimes, particularly at edges. If the volume is low with a failure, it helps confirm the failure, or a breakout if it's high volume. There are two rows of Bs because eventually the left-hand B will be the composite profile collapsed and the right-hand B will print each 30 minutes bar split out.
Notice again, one more time, we went right back to the opening. When it goes right back to the opening in buying, that is usually a sign it's daytime frame or weaker money buying. That exactness. Oh, I know the opening. That's where they buy. It's a very mechanical buy. A lot of churn going on in here this morning. See that volume continue to build there, 15,000. Remember the last time it went exactly to the opening. When it goes exactly to the opening bounce, that is usually not a sign of strength. Julia, at this point, how long has the market been open?
It's now 9:37 Eastern, 7 minutes.
Okay. So this is what you're looking at so far is the first 7 minutes of trade. Notice how narrow that base is for the first 7 minutes. Notice how many times we've been to the opening or back and forth through the opening. That is a sign that we do not have a real lot of strength underneath there. We are back to that opening again. Remember how much attention I called back and forth through that opening early on. Also notice at this point, if this market was really going to head south, you really would more than likely had the selling take place a lot faster than it is. We know it's going to sell off later, but normally you would have had more conviction right off the bat. Market's absorbing all that news. Again, one more time, we're back to the opening. It's very important. One of the things I like about a window trader is I can see the opening very easily. Okay, we've got that high volume. You've got to remember this high volume number up here. If we come back through that later on, those sellers up there are going to be forced to cover. That is something you should carry forward. And notice we didn't get this high volume and then crater right away. It took some time. Remember we said early on this was not a high confidence low. It was, right at yesterday's high, one tick below it. That is not a sign of high confidence. Okay? The market now is back for the second time trying to re-enter yesterday's range. When I see a market re-enter yesterday's range, anybody that knows me that I usually see that as a sign of weakness. So I've now been, even though it's only slightly, I've been back into yesterday's range twice. See the market, they're just automatically buying the low. Just see the mechanics of this. Just get the traders. Long-term traders don't automatically buy the low. That's short-term traders. Remember, overnight inventory is long. Now we're back into the range. Also, if you can stop for, well, not yet. Let it keep running. Let it keep running. But as it's running, the very prominent point of control, and we always write that's high odds that that will be revisited. The wider this is from left to right, the greater odds it will be revisited. Notice the first time it bounced from one tick above it.
Yep.
So we haven't gotten to that level, and it bounced, but keep an eye on this market. Remember this volume up here? Remember how many times we were back and forth through the opening? Remember that we, have come into yesterday's range twice now?
And it's also the unchanged. That's what the circle. It's the circle, yes. Point of control, but it's the settled. Yeah. It's the settled or unchanged or unched. That's always a day time frame reference. So they were buying right above, right at the just above the unchanged level, which is also the very prominent point of control. Remember, I pointed out we hadn't been back to that point of control. All right, here we are. We're back into. We're at unchanged. All right, now look. Now we're below unchanged. So the machines in front of you are hovering from green to red, green to red. We have not gotten to the overnight low. But remember, we re-entered this distribution. The destination trade becomes the lower end of the distribution. The lower end would be the L here and the overnight low. And I say L because that was the afternoon pullback low. Okay, see the market hovering around unchanged. Now, who do you think's buying it actually just above, right below and above unchanged? That's short-term daytime frame traders. And we have
also.
Go ahead.
Also, what I want you to know, remember, I said, if you were really going to get something to the downside, I think you would have had more confidence early on. I think you would have seen it faster early on. Okay, now we're below unchanged. You were going to say something, Julia.
Yes, thank you. Pardon me. Do you want me to stop this? Is there anything? I don't know how long it is before we.
Well, here's what I want you to watch. You can be talking. Notice that we have not taken out the overnight low. We are now back above unchanged, and the volume is not huge down here. Remember, see how it's red up here? See it's still white down here? We are not getting a lot of volume on the sell side. This makes it very confusing, and we're back above unchanged. When I talk about, later on, you're going to see this market breaks. And when I talked about it, I said, and I was on the IM with somebody this morning, and they thought there was a possibility of the trend day the downside. I said, maybe, but I said it looks more like liquidation at this point. And part of that was because this wasn't getting red. We really weren't getting the volume. Once we got down here, I kept thinking, okay, maybe the trend day is possible, but it's unlikely because we really didn't have the confidence from the get-go. Here's yesterday's value. We are now, how many minutes are we into trading, Julia?
9:43.
Okay, so we're now almost 15 minutes into trade. The longer it stays up here, the harder it's going to get lower value. It only changes via time. Not impossible, but the longer we stay up here. And notice we're not getting any high confidence selling out here. Now this market's going to rally all the way back to the early morning heavy volume highs.
No. And just so people are aware, this is the blue shaded area is the value for yesterday's pit session. That's why Jim is saying as time passes, the likelihood of getting unchanged value is lessening. We have a question, Jim, if I can ask, or do you want to go ahead?
No, in just a second. There's an awful lot to take in here. Remember, You don't have to trade until you're comfortable with a market. So many times, traders are too anxious to trade early in the morning. They're too anxious to trade early in the morning, and they get chopped up. This is not a high confidence market in here, and we know overnight inventory is long. And at this point in time, my recommendation is just kind of suck it in and sit back and let this thing develop. Okay? You had a question, Julia.
Yes, sir. Thank you. How do you know that, this is a few people, how do you know that the high volume node was sellers?
Where would the market, if that volume was buying, where would the market be? It'd be higher. It'd be higher. If you know, it's just some of this stuff is just kind of common sense. You know, if the market, if you get high volume there and it goes down, guess what? It was sellers. You have to pick a circle around that, because remember, if we come back through there later on, what's going to happen to those people? They were selling there, and we come back through there, guess what they're going to have to do? They're going to have to buy to cover. There's some parts of trading, you know, sometimes people outthink themselves, well, was it buyer, was it seller? I did all of those things. Just kind of use some common sense. You got that much volume and it goes lower, guess what? Predominantly it was sellers. Now you said, well, there's got to be a buyer for every seller. That's right, but who was dominating the market were the sellers. Okay, so now we've come back up again above yesterday's range. We're back up to halfway back. Halfway back is the white line. Halfway back is an area that short-term traders look at. It's called the half back. It has no other significance other than it's just something, it's becoming a kind of a custom. People will buy or sell it at half back. Don't ask me why, it's just a custom, and you know, we did it years ago on the floors and stuff, just because it's something you can find and identify. Okay, so at this point in time, how much time's gone by, Julia?
$9.46. You see that up there?
9:46. Okay, 9:46. So
and we're still in a five handle. It's less than five handles. 25 to 29.50, 4.5 handle range. So
we got it back. We got back into yesterday's range. We got back into yesterday's. We haven't gotten to the opening. But what you want to feel in here is there's really no level of confidence in here. We're watching.
Okay,
we're watching. Hold on. We're watching pretty closely. We're back up near that high volume mark again. So the more we get back near that high volume mark, we didn't get through it. We didn't get through it at this time, but we're back up there, and be very careful, because if it goes through there, that ask can be forced to cover. But we're right there again, 17,000. They're selling at that level again. The opening right below it. So do we have high confidence on the high? I don't think so. Do we have high confidence on the day? I don't think so. Have we been back and forth through the opening? Yes. Have we been back and forth into yesterday's range several times? Yes. Julia, you're trying to say something.
Well, we had a question earlier. This high volume node we're trading at right now, it's also the high volume of the overnight session. And he was asking, is there any significance in your opinion? You also notice it went down to the high volume node here in the overnight as well. You will see it tend to do that, but Jim doesn't follow that.
It may, but I don't follow it. It may work. You can look at too many things. If you start looking at too many things, you know, you can end up like the goat that starved to death between two bales of hay. And you'll always find one time it works and you find another time it meant nothing. You know, this is going to be high volume down in this end. Why? Because it's down around the settle. So you're going to get high volume around that settle area from yesterday, up and above it, below it. Okay, notice we did not take out that price. We increased the volume. Notice the two highest prices are still white, but ask yourself how much confidence is on the high here. Okay, even though we got back up from there, even though we got back up there, They didn't get through it, so people were there waiting to sell again. Now where are we? We're back to the opening. Here's the half back mark. We're going to watch again to see if we get below half back. There's a tremendous amount of emotion going on this morning. Tremendous amount of emotion. I'm going to guess that most day traders have been into several trades by now. And, you know, this is the kind of thing that can wear you down and cause you to make some really big mistakes. Think, oh, boy, it's going up. Oh, it's going down. Sometimes there's an awful lot of advantage by just letting the market shake itself out. Now, let's change the circumstances. Let's say it came down and it couldn't fill the gap and starts up. Go with it. Okay, if it didn't get into yesterday's range, it didn't fill the gap. A whole different level of confidence. But this one did fill the gap. It did get into yesterday's range a couple times. We're back and forth through the opening. This is not a high confidence environment. Value is building higher, and the longer we trade here, the greater the odds that value are going to remain higher. Once again, whether they're using for support, they're using the top of yesterday's high. They're using yesterday's high as support, or the top of yesterday's upper distribution as a mechanical support level. Back to the opening again.
And Jim, in terms of the gap rules that we see play out over and over, you know, if value can't become at least unchanged after the gap fill, the chances of a move in the direction of the gap late in the day
or later in the day
later in the day are very high.
Very, very high.
Which we saw again today. Yeah.
Here's the question I would ask for most traders. If you're really into what I talk about, have you thought about the opening? Have you thought about where value is developing? Have you thought about the level of confidence? Have you thought about the narrowness of this range so far? Have you thought about the overnight inventory? Or have you been mostly focused on price? That's a heavy-duty question. The easiest thing is just to follow price. Easiest thing to follow price. I did a webinar the other day, and I mentioned that I had a losing week last week, and it was kind of disappointing. The market-generated information was perfect. It was Jim that wasn't perfect. This morning, I traded this morning like I'd never had a losing time. I was reading this market perfectly, and that's why I'm going through it now. I was reading all of this, and the time I got the most excited when we came out and took out the overnight low and the afternoon pullback low from yesterday. I thought maybe we've got something, but it didn't feel like it. But if it was going to happen, if you know me and work with me, once it breaks down there later on, you're going to hear me say, if you've got anything, it's going to be a double distribution day, and it should hold the lower distribution. It hasn't happened yet, but you've heard, anybody sitting with me, you know that it happens enough. Incidentally, while we're waiting for the time to change here, the intensive that we have in July, that goes from July 7th to August 8th, anybody that signs up, as soon as they sign up, they get these the reports that you're seeing here. Plus, starting the day the intensive starts, there's a chat window that goes on the lower right-hand corner of my screen, and it's a one-way chat. It's just for me to make comments. And I would, like this morning, I would be making confidence. Very careful, confidence is very low. Back and through the opening multiple times. I'd probably also be saying, carry forward, meaning note this high volume area up here. And it's important, we got back there twice. We got there the first time, then we went back to it. So if it was really confident selling, you're not going to get back to it. Okay, we're back to half back, and we're right at yesterday's high. Go ahead, Julia.
How does Jim know when price is accepted at a certain level? In other words, volume by price or other parameters. You know, what helps you gauge acceptance? I mean, clearly we went lower this morning, couldn't get to the overnight low. It was kind of rejected.
But it's all of the above. You have There is no nice answer for that. That's I write that. But what you've got to get into the context. And what you do, what makes a trader is learning how to observe a market. And that's why I wanted to do this today. I wanted to walk through with you how to observe a market. What do you look at? What do you stay out of? What are you really trying to focus on? And over a period of time, that idea of acceptance or rejection will become clear. You're going to see one here in a little while. Okay? We're back into yesterday's range for the third, fourth, or fifth time. We're back at unchanged again. Julia, what time are we at right now?
Hold on. 9:50.
9:55. So we've got 5 minutes before we change time periods. Again, read the confidence.
And someone is saying here, and he's been to a couple of intensives, but he said, I sold for the double distribution, in other words, to see a break, but he said once it failed at the, yesterday's lower extreme of the upper distribution, he just covered it. But he could hear you saying if we'd have a double distribution or we'd start to really break. So that's great to hear, Jason. Good for you.
Okay, notice again, it's hovering around unchanged. Again, what is the level of confidence? Multiple times back and forth through the opening. Back up to just a couple ticks short of the high. 3 or 4 times, 5, 6, 7 times, whatever it is, back into yesterday's range. Multiple times around the unchanged level. What do you think the level of confidence is? This is a half an hour, and we've had all of this going on. This is a low confidence environment. These are the environments that will cut you to pieces. Julia, you there?
Yes, sir.
Oh, I heard it go off. I thought I lost you for a second.
No, while I'm typing, I know it's distracting. Okay. People are saying, what if it, go ahead, back and forth. They're saying, well,
okay, go ahead. What are they saying?
It didn't, we're not getting accepted into yesterday's range, or, we do not have acceptance below yesterday's high. I don't get what the criteria is in terms of acceptance, but.
Well, the time's going to change here in a half hour.
You've been back in a minute, forth,
you've been back and forth there multiple times. Sometimes these answers don't make themselves clear right away. Okay, there we are. We're going out for the overnight low. If this is true to form, they're 1 tick short.
I think the overnight low's right there. They got it.
Oh, okay, they're right at the overnight low. Another mechanical place. You say it's not accepted in there. You look at the clock. And you say, when's the time going to change? The time changes and you're printing in there, you've been accepted. And you can say, well, there's a pretty good chance. There's no science. People want exact answers to those things. They're not there. But what is exact answers? Confidence is low this morning. We've been back and forth through the opening several times. While the high's got a lot of single prints, we've been back and forth to it a couple of times. We went down exactly to the overnight low, exactly to yesterday afternoon's pullback low. Okay, who buys at that level? Again, that's short-term traders buying there. And where they took it? They brought it back up to unchanged, back up to the halfway market. This is nothing but short-term trading. When it's exactly at that level, that is just short-term traders doing buy orders there. Notice the volume, 257, 432. Half back, there's half back. Now, if you're trading this morning, if you're trying to be in and out of trade this morning, you are very frustrated. You are mentally worn out because this market looks like it's going up. It looks like it's going down. You net it all out. The base is pretty narrow. We've been back and forth into yesterday's range. We've been through the opening. This is part of trading. Do you have the discipline just to sit out on low confidence environment and let the market set up and say, you know what? If I miss a trade, I miss a trade. So what? If you didn't have that discipline, my guess is You were in and out of this market several times this morning, and more than likely you got cut up. You probably got cut up on more than one trade. Too many people are too excited to trade early in the market. Had we tried to fill the gap, didn't fill it, I say get on board early. We fill the gap, mechanical places down there, let the market set up.
Right, so you could have taken the trade on the gap fill when it didn't go through, but once it got back through the open and got up to that high volume node and saw no follow through, knowing the confidence was low in the context, you would have scratched that long gap fill trade and waited. Yeah.
You know, that's nice in hindsight. That's an awful hard trade to do, because I can tell you it came off of that low. It came off of that yesterday's high so fast you hardly had time to act.
To put it in, yes. But if you did get in, you wouldn't want to stay long once it couldn't take out the early high.
No,
you know, that's just right there. You say, "Up, this isn't my market."
But also important. You immediately recognize if you buy it there, that is not a particularly good low, and it's not. And you didn't even get to the point of control. Okay, it's a very prominent point of control. Those are the things that kind of help set up the odds. Okay, now the second period is open. The longer it took, it's a second period, value is still building higher than yesterday at this point in time. And we're now, you know, the second period, we're getting accepted clearly back in here. Look where the market stopped, once again, unchanged. There's so much emotion going on in this market, you can't even believe it. Record the high volume up here. Notice the high volume right here. 18,000, 17,000, 20,000 contracts. There's a lot of volume up above the halfway point.
This is, yeah, half back.
Half back. Okay. Don't forget about all that. Notice how it stays red up there. Market's back above yesterday's high again.
And we have a question, Jim. Do you look at initial balance?
I don't look at it. I don't look at it and measure it and say that. It's just an internalized to me. I look at it and I say, the balance is very narrow. The initial trading range is very narrow. It's very unlikely we're going to keep that range. But I don't measure it as I talked about it in the first book. I look at it much more from a very practical sense. And you're going to see as this goes on, you're going to see things far more important than initial balance. It's something that's internalized in me. I know it's narrow, just as Julia said. It's, you know, it's in 5 handles. We know it's probably not going to stay that narrow, but you're going to find things that are far more important. I had somebody email me today and ask me, do we teach the 8 different trading days? I don't even know what they are. You know, initially I identified 5. There's somebody asking about 8, and that's trying.
Oh, the day types. You mean
the day types? That's
okay.
Somebody trying to make people want the market to be kind of mechanical, and it's not. I understand wanting that. I wanted that too. It was very frustrated when I discovered that while that was nice to know, I certainly needed a lot more than that to compete in a very, very competitive world. And you know, some of the things, what I've talked about this morning, we've talked about back and forth through the opening. We've talked about confidence. You didn't see any great write-ups on confidence, the level we're talking about here in my first book, Mind Over Markets. You know, I didn't have enough experience. I had the mechanics. I knew the types, you know, and I knew how to read bar charts and stuff like that. And I knew, you know, if you had a narrow base, it's easier to get knocked over. And I knew excess was important. I didn't know the lack of excess, how important that was. Okay, but these are the type of things. Remember, very few people are successful daytime frame trading, and you can see why, because it is very hard. It is full of emotion, and there are ongoing, continual conflicts. Again, we are down below unchanged. We are in the second period. We said this was a mechanical low. That doesn't mean it's not going to last. But this was a mechanical low to be exactly at the overnight low, be exactly at the pullback low from yesterday afternoon. It may last, but it's certainly not high confidence. Do you think any longer-term money has any idea where that exact price is? Who knows where that price is? It's short-term daytime frame traders. Okay, you were starting to move your lips, which means you must have another comment or question.
Well, thank you. Would Jim consider it a low risk trade to buy the overnight low and stop out below the lower end of yesterday's distribution? I think he means upper distribution from yesterday.
There's
Maybe.
nothing wrong. There's nothing wrong with that mechanical trade, but it's not a trade that I'm interested in on a day like today. It's unlikely. It's unlikely that that's going to hold because it's so exacting. It may work. It may work, and you may get a few ticks at it, but it's just not something I'm interested in. If you want to do it, it's an okay trade. It's an okay trade. You got a clear place to put your stop, but like I say, there's a pretty low odds that it's going to hold. And remember, the overall confidence of this market. When would I like to buy something like that? When the confidence was high. I got some news announcement, took exactly back there, and it came off very quickly.
And Billy Bob's asking, was the 83 volume on the B period high right from the opening of B period not a possible short entry? Because there was no volume on the high there. It was fading. And we knew the overnight inventory was long.
There's nothing wrong with it.
Yeah.
There's nothing wrong with that. But I'm reading in here, I'm reading that the confidence overall is low.
Oh, he meant C high, he said. I'm sorry. He just typed it. Right here, Jim. The 83 contracts on the C.
Oh,
Charlie.
After the fact, fine. But it's not a trade I'm interested in. You're back and forth through this opening. Confidence is very low. It's just not. You know, after you say 83, but this market it's unlikely this is going to be the range for the day. Confidence is very low. Sit back, leave it alone. You're going to wear yourself out. And I understand people are going to trade it. Like I said, my guess is there's people out here have done 4 or 5 trades by now. If anybody out there's done 4 or 5 trades by this point today, you know, type it in so we can see it.
And I won't give names, when Jim talks about the value becoming unchanged, at which point in early trade can you determine the value is holding higher? For example, early value now is holding higher but slightly overlapping. But if the market were to break and hold the prior day, you know, go lower, it would be possible for a value shift to unchanged if it held down there.
What I'm focusing on more than anything else, there's no exact answer to that question. What I'm focusing on more than anything else at this point, all trends are up. More than likely, I did not have an all-time high to the market made in the overnight market. You know, that could last for a few days, but more than likely I don't. And if this market had any real confidence to break, more than likely it would be underway by now. Now we've spent, you know, a considerable amount of time. We're getting acceptance up here at this. So value is building higher. It's going to take a hell of a break to get lower value today. So what would you need? You would need a double more than likely you would need a double distribution day. Now, conflict, I've also said, I don't think this low this is not a high caliber low. That doesn't mean it's not going to hold. Now, I mean, I know because we're replaying the day, I know it didn't hold, but I thought that at the time, that it was, you know, very low odds that it was hold because it went exactly to the tick, to the afternoon pullback low.
And the overnight.
To the overnight low. Who buys to the tick? That's short-term, daytime frame traders. That is not what strong money does. It's weaker money. It's weaker money. It's nervous money. It's trying to be exacting money. And sometimes they win. Sometimes they win. They won yesterday afternoon on the pullback, went a couple ticks below it. But okay, here we go.
We have several traders that said they've put on 3, by the way. 3 trades has come in many times. So
okay. And see, and by this time, you're probably exhausted. Now, I want those people, I might ask those people to come back to me later on. Because here we are now, we're back down. Now watch what happens. We're going to tag the low and bounce again, or we'll come 1 tick short of it. So we're going to have a poor low, and we're going to bounce again. Okay, there's the poor low. Watch the a little bounce. We got a poor low. Now we're through the low. Okay, Julia, are you there?
Yes, sir.
Okay, what I want you to stop for a second. One of the things that was in that write-up we looked at before we got onto this, one of the things I said, confidence on the break,
Oops.
watch.
Shoot. Sorry, everyone. I'm obsessed. Go ahead.
Been working on your
I was trying to pull up the report.
When one of the things I wrote is the market stutter stepping lower. And I said it rallied several times. That's what I was seeing. That's what I was recording. If this was high confidence, we wouldn't have gotten back up to this 18,000. It made it and went back up to it, maybe went through it one tick. So we wouldn't have gotten there. So we've got 18,000, 21,000, 17,000. Okay, let's continue to play.
Okay.
And notice the lack of confidence. We've gotten through that, but notice we didn't go through and just tear through that. Again, that's what I wanted to replay this today, because one of the things I talk about confidence all the time, but how do you get a grip on when I talk about confidence and tempo? And you say, well, what is confidence? And I'll say, golly, I don't know how to explain it. You got to watch it. And this is what I'm trying to do. I'm trying to use today to show you what a lack of confidence looks like. Okay, so now the market's breaking. We're getting the liquidation. We're down below the overnight low. Anybody that was long overnight is now underwater. They're now underwater. If there's anything to the downside here, I think it's going to have to distance itself from this lower distribution, and I think you're going to have a double distribution day.
Jim, when you say lower distribution, you mean this middle distribution here,
upper,
right? Okay.
I'm talking about the upper distribution. Yes,
right here.
The lower extreme of Wednesday's upper distribution. Remember, we treat it as a separate day or auction.
Someone is saying, I was short from 1927 and looking for the one time framing lower. So he did take that, back into yesterday's range trade.
And that's fine. That's fine. You got a reason to take it, but it was back in there and out several times. So if you took it early, you probably got stopped out a couple of times.
Maybe he took it in C period there at the beginning.
Okay, now we're back to the question. Are we getting accepted down below here or not? Notice the buildup. We're getting more buildup of volume. Give it a little time to get the liquidation from the overnight. Remember, anybody overnight, all these people that got excited when Draghi spoke, they're all underwater.
And we've seen the overnight inventory being excessively long or short adjust all week. I think you've said it's been 6 days, right?
6 days in a row. Again, remember, this is real time. So, I mean, this isn't greater. They're working lower. They're working lower. We're down below this. If there's anything to this market, you should keep the double distribution. What's the level of confidence? Remember, the confidence has been low all day long. Very important. We have stutter step down. When I say watch a market that stutter steps, this is what it looks like. You've seen several rallies. That's what it looks like. A high confidence market, if you had other time frame sellers in the marketplace, you're not going to see this much lack of confidence. You will see them have some determination, and you'll see the market, and it will go down. It may pause and then go down again, but you'll see much more confidence. We're now, how much time have we been in to the market so far?
Okay, hold on.
Okay, 10:13. So we're now 45 minutes. 45 minutes into the day. The market is down below that reference, which we had as the upper distribution from yesterday. So now, if there's anything to this break to the downside, we should keep the double distribution. Anybody short, they should have their stops someplace around the 1924 level. But when I look at this, I'm seeing the confidence appears to be very low. That doesn't mean that it can't continue, but it's and there's a lot of stuff down here. There's a point of control down here. I mean, it was revisited, so it doesn't count. But again, feel the lack of confidence. Yes, this is the low of yesterday's value area. Julia, can you put a line across the low of yesterday's value area for me, please? Okay, now, when you're thinking about this, in order to get unchanged value from yesterday, just unchanged value, you have to get below yesterday's low value area price, and you have to stay there. You have to stay there and spend time. You have to stay there and spend time. Okay, notice this break, we're down at the low of the value area. Down there, we've got some extension on the downside. Okay, that's probably the final worship. Notice the whiteness. Somebody asked about the color earlier. Okay, and what you really want to see, if this is going lower, you want to see this being pretty red. Now, remember, it's still red up here. It's still red here, here. Remember, all this volume more than likely on the sell side. If you don't hold this double distribution, if you hold the double distribution, that's great. If you don't hold that double distribution, watch out, because all of this volume is probably going to have to cover. This is probably people that were selling, probably a lot of shorting in here, and if we get back through it, watch out. See, most people at this time aren't thinking the potential of a short covering rally. They're seeing this market go down. And like I say, I was in tune today. Even though I hate the market, anybody knows I don't like this market. I think we're very oversold. But I was reading the day's market very well, and I'm reading overbought. I'm sorry, overbought. And I just couldn't get to the confidence on the downside here. I just couldn't get to the confidence level. If it's here, then we've got to keep the double distribution. Now, a lot of times people ask, what about it? What's excess? They ask about the colors down here. Notice the color's pretty light on the bottom side of this market.
Meaning light volume.
Light volume, the white color, light volume. More than likely what's happened right now, we finally forced the longs from overnight, the laggard longs from overnight, to liquidate, and we've probably gathered some late shorting as we broke below the overnight low. If there's anything here, we need to keep the double distribution. If we can't keep this double distribution, then the market is probably going to go back up and take the high. Remember, what I wanted you to see is this lack of confidence throughout this whole day, and I want you to reflect back on this high volume up here. Remember, we didn't just make this one time and head down. We came back to it, maybe one tick through it. So this was not high confidence selling up here. And remember, we've got heavy volume here, here, all the way down. If we get back through there, watch out. Look at this market. It's white on the bottom. What time are we?
Hold on one sec. And Jim, we have a question, 10:18.
10:18, okay? We're watching very closely to see if we can hold this lower distribution. But remember, what I'm looking at is confidence. Julia, you had a question.
Yes, someone's asking about, a few people actually, the double distribution you're referring to is right here from today. In other words, we should
Correct.
keep and hold the single prints, not from yesterday, today. So if it comes
Today,
back up into this area,
correct.
the first half hour, then it's not looking very good for the downside.
No, then you're probably going all the way back up. Because if you get back up into here, you didn't keep the double distribution, you have an excess low, and your chances of value being even overlapping overlapping to equal have diminished tremendously. In other words, in order to get value even overlapping, you've got to stay down and spend time down below yesterday's value area low. We came back to it, we made the low, we rallied, we came back and tested it. If you're reading the conference, what I've been trying to show you all morning long is this lack of confidence from the beginning. Lack of confidence. And remember, all trends are up. The market is very long. There's all kind of inventory that could be liquidated if they really wanted to. The longer time frame has had a lot of time to sell at all-time highs. And if they were taking advantage of those all-time highs, I haven't seen the confidence that tells me that they're in that market. If the longer time frame was selling, they'd be selling in large contracts, and there'd be word going out to the brokers that handle them that, you know, Morgan Stanley's selling X number of contracts, so-and-so, and you'd find a lot of piling on by the short-term traders. I think you're getting liquidation in here. I do not think you're getting new money selling, and that's what is so important. Confidence was low this morning. It was low from the get-go, back and forth through the opening, and you're not able to hold the double distribution. You don't have a lot of volume on the lows. I think you got them caught. I think all you had is liquidation, and I think you got them caught short.
And just to, when Jim says value unchanged, he is referring not to the point of control, to the two value areas relative from yesterday's pit to today, the blue highlighted area to this blue area.
And you know, there's the low from yesterday's. If you take the whole day, not just the upper distribution, but it's going to be pretty hard.
Yeah,
pretty
here
hard.
it is.
Now,
And
you've got an excess low. This was rejected, an excess low. Now, remember, all of this
down here,
here, red. Remember, I've been pointing this out.
Oh,
18,021.
Oh,
that's short. We get up through there. Watch out. That selling from early on can get forced to cover, and you got one heck
right
of a
in
short
here.
covering.
It can get pulled over, as you say, pulled over
right.
on itself.
They were excited. They were selling. They were liquidating this morning. But remember, the clue was really the low confidence early on and the value. Okay, Julia, this, as we know, this market's going to rally the rest of the day. It's going to take out. It's going to catch all of this stuff short. And
yeah, these people. Yeah.
And you're just going to. It's just going to be a bloodbath. I wanted you.
Oh, pardon. Go ahead.
I wanted you to see the early morning. I wanted to walk through it. And this is one of the most important sessions you will ever experience in trading. These are the days that can chop you up. These are important days to understand, because it's easy to let your emotions get carried away and think that it's a home run to the downside, and when it turns out it's a home run to the upside. But it's really easy to get trapped in these days. Confidence, it is almost impossible for me to write a paper that explains confidence. It's much easier for me to show you as it is underway. And these are Julia came up with the idea for the 60-day intensive. We did 160. We're going to do one summer school for 30 days this summer. And the reason we do the intensive is it allows much more hands-on and much more time to work with situations like today and to understand confidence. We call it immersion trading. You're immersed in the market rather than going to a seminar, standing 3 days, 3 days in a hotel, conference room, where you may or may not get this kind of exposure. Over, 4 or 5 weeks, we get a lot of situations where we can go into some detail to give you a first-hand feel of what markets are really about. It's not anesthetically, like a textbook or, from point and figure charts or from, slide charts. It's from the market real. That's what we're really trying to work with. Okay, we've run a lot of time. What I want to do now is I want to get you ready. I want to get you ready for tomorrow. And the first thing.
Okay.
Go ahead.
We had a couple of questions, but I know we got to keep it rolling. Some people have to leave. Everything is being recorded. But we had a question. The red prints below the overnight low, in other words, this high volume, is that people covering from creating overnight, people covering their longs, or is it some other kind of buying? And I think you say the answer is both. It's difficult to know what, but
yeah, I don't really know.
Clearly it's buyers.
Is seller, but I don't. This might have been liquidation early on. Maybe it was being met by new buyers because we didn't really, you got the final liquidation out. But the big thing is it stayed light volume down here. We're back into this range. We didn't hold the double distribution. We have an excess low. Once in the continuous two-way auction process, once you fail at this end, the destination trade becomes the opposite end. Remember, the all-time high, it's unlikely it's made in the overnight market.
And
okay.
One more question, quick, Jim,
Sure.
because the confidence is so hard to understand. And acceptance. Do we need confidence in order to establish that there is acceptance?
No.
Because acceptance is back in a range, and it can have low confidence back inside a range.
See, I would say this was rejected.
Where are you saying down here?
Bottom.
Yeah.
This was rejected with the words light down here. This was
white
rejected.
volume. Yeah.
This is accepted. This is your excess. Excess and balance, two most important things you'll ever deal with. So this was accepted.
Oops.
Okay.
Okay.
I'm sorry.
Rejected.
This was rejected.
Mm-hmm.
Now we're back up into the range. This is an excess low. I mean, you don't know at the time. We know it went up all day. But at the time, more than likely, you want to be long. Once you got the excess low, the chances of having even overlapping, lower overlapping value are very minimal because you have to spend time here to get. That's one of the things you have to understand. To get value down here, it takes time. And the chances of spending much time down here have diminished considerably.
Right.
Okay.
Okay.
Now, here's what I want to talk about for tomorrow. Let me go to my screen. Julia's got a chart of this.
Sure. Yeah. Let's. I'll get you back.
We're going to. Oh, let me know.
Okay. Here you go. Just hit the button.
Okay. Can you see my screen?
Yes.
Okay. Just as we talked about from yesterday, we had a double distribution. We have a double distribution today. I'm just letting that come back into balance here. Okay, so we have an upper distribution from today, just as we had yesterday. You already know from what we talked about, I'm going to treat this as a separate day or auction. Very important. I'm going to treat it as a separate day or auction, just as I did today. Today's volume was 2.9. Hold on, let me double check that. I'll be just a second. Today's volume was 2.9. That's higher than we've had the last couple of days. That is very light volume for the range we covered, both on the downside and the upside. I think what you had happen today, you got the market too short. I think you had a huge short covering rally from people that got too short, too early, too excited on the downside. So tomorrow, it's this upper distribution. It's going to be your focal point. And that will be in the report that we send out to people that are registered for the intensive. And the next thing I want to cover is the announcement will come out. The employment number will come out an hour before we open in New York. The first thing, for people that haven't heard me before, the employment number really is not a big deal. It's one of these things that they hype on TV and the talking suits, and they have people guessing the number. It is not a number that the institutions follow. The long-term money doesn't follow it. The long-term money pretty much tracks, use the weekly numbers, and they track the weekly numbers and see what the trend is. The monthly employment number is just huge hype. If you go back over several employment numbers, you will find you may get a lot of volatility right off the number, but you'll find by the end of the day there's usually very little change. Okay? But let's talk about the situation when there is a lot of change. And what I'm going to talk about now is the period from the time the number comes out until the time that the New York Stock Exchange opens. Every time we have done this, I believe, 3 times we have done a live webinar during the intensive of the hour before, between the release of the employment number and the trade that took place once the NYSE opened. And I believe on all 3 times we have pretty closely been able to kind of lay out what the trading would look like for that day. Let me outline it very quickly. Let's say, for example, the number comes out tomorrow and the number is negative and the market sells off. So the first thing we're looking at is the knee-jerk reaction. If the knee-jerk reaction is to sell off, and it sells off several handles, and there is very little bounce from that low between the hour that is released and the time that the NYSE opens, then the odds are pretty good that we're going to have a trend day to the downside. Likewise, if the number, spikes a rally and the market rallies and it pretty well holds close to that high by the time we open on the NYSE, then the odds are pretty good that we're going to continue higher for the remainder of the day. So everything I talk about is the mirror image. So let's go back and let's say the market breaks very sharply on the number, but by the time we open for trading on the NYSE, let's say we're halfway back up, or almost all the way back up to that from the early announcement. Well, let's say that on my screen here, let's just assume this was the break, it went down to the white line. So if it stayed here, pretty good chance we're going lower for the rest of the day. This is second example. This is the low after the announcement. By the time we open in New York, we're back up in here someplace. Then more than likely we're going to rally or, do some overlapping with the upper portion up here. It's just an indication. There's a lot of information in what happens electronically between the time the number comes out and the time the pit session opens on the NYSE. It really, not terribly more complicated than that. People will have all kind of questions. If it's right here, they'll say, well, Jim, is that considered a good rebound or not a good rebound? And you've just got to use, you've just got to get a feel for it. If it opens and it just kind of hugs down the bottom most of the time, we're probably going lower. If it makes us low and we're sitting around here, we're probably going back up into here someplace. All right, a couple of quick questions. We're over the extended time, but I wanted to do something special today. And Julie, oh, I've got the screen. Let me go back for just a second here while you're readying some questions here.
Yeah, I have a couple of questions.
Before you do the questions, the 30-day intensive, July 7th to August 8th, that's 5 weeks. It includes about 8 hours per day where I will do narration, like 8 hours a week of what you saw today. So that's like 40 hours over the 5 weeks. If there's special things that go on, we're inclined to throw in webinars like we did right now. It includes interday chat. Like I said, there'll be a chat dialogue. It's one way, but you'll see comments I make upon that. Upon enrolling, you start receiving the 2 daily reports I've talked about, and on enrollment, you gain full access to the over 100 trading articles. There's also a $50 discount for early enrollment. For people that are new to us and want more understanding of what we do, there's the Field of Vision DVD and Workbook program and the Live Market Seminar program from Chicago. And the Live Market Seminar program from Chicago, that has an absolutely wonderful conclusion to it. On the last day of the seminar, I walked into the room and said, this may be one of those days where the market opens weak and finishes strong. And the market was very nice to accommodate me in the last 40 minutes and give us a 400-point rally. It certainly wasn't planned, but it's nice to have it on tape. Anyhow, we would love to have you as clients. We'd love to have you back if you've been in prior intensives. But there'll be a formal announcement going out. But the sooner you get up, the more you get access to what we've got. Julia, you had a couple of late questions.
Yes, thanks, Jim. Would you consider today to have excess because there's a two-tick, there's two single prints on the highs? Would you consider it a potential excess?
Well, there's certainly no sign that the longer time frame was up there saying, wow, isn't this a wonderful opportunity to sell?
It's really fat, yeah.
There's no excess to write home about. But let's say tomorrow, let's say you opened down below that lower distribution yesterday. Let's say tomorrow you open down below today's upper distribution and you really start to sell off, then I think that's probably excess that may hold for a while. Remember, we've got a lot of junk underneath this market. We've got a lot of poor structure, a lot of poor volume taking us to these levels. So the potential for a correction is certainly there. But start off tomorrow focusing on the upper distribution. We treat it as a separate day or auction.
Could you show, someone's asking about overnight inventory and really just inventory in general, how you know when it's too long or, too short? If you could just, and the overnight inventory is pretty straightforward. If it's majority above the settle, it's long.
Here's yesterday's settle. The majority of the trade is up here. Inventory is long. And if the inventory was back and forth from here to here, then we'd say it's neutral. This is mostly long. It's no more complicated than that. Why it's important is more complicated. People say, well, Jim, it's got to be a buyer for every seller. That is correct. However, the people that buy or sell in the overnight inventory tend to be weaker, more emotional traders. So if you're net long, as we were today, that tends to be weaker hands, more emotional traders that are more apt to be forced out of their position very quickly.
And then in the overall pitch sessions, Jim, when you would say, like for instance, in the Live Market Seminar DVD, you were saying, the first day there's this multiple time frames are getting too short. So there was just overall accumulating, the market was selling, and it was really finding a bottom. And that's when it turned in the last 45 minutes for 400 Dow points. So, but
it's more
he's wondering how, I understand, but he's just wondering how you know when it's very long or very short.
Because there will be, the structure on the way down was very poor. There was no elongation. Volume was low. And I could just see the market was just getting unbelievably short. The problem is, I've been saying that this market has been the current market's been very long and with weak hands. And I've been saying, do not lean into the wind. Do I like the market? No. But I say, do not lean into the wind. It's not over yet. We don't have any excess on the highs. All right, Julia, let me take one final question and before we sign off. Or are there no more questions?
If we enroll early, we get access to the archive articles and webinars. How long do we have access? Indefinitely. Anyone who buys anything, they have indefinite access as long as we're doing what we do. You're a member for, you're a member for people who bought 4 years ago still come in and read them.
Of course, they drive Julia nuts because they haven't looked for 3 months and they can't remember how to log back in. So
it's okay.
The bigger the client base gets, the more Julia is always answering those questions. But anyhow, and don't forget, the sooner you come in, we start giving you the reports. Anyhow, I want to thank you very much. I hope taking this extra time and adding this extra segment today was worthwhile to all of you. Thank you once again, and have a great day tomorrow.
Okay, thank you, Jim, and thank you, everyone. Recording will be up this evening. Okay, good trading tomorrow.